Welcome to Teeing Off with Titans, conversations with some of the industry's best investors. Today, I'm pleased to be joined by our own Karim Simplis. Karim Simplis joined us a few months ago to lead our private markets effort. It's a position that we were looking for some time. Karim, as you know, Teeing Off with Titans has a golf theme that is kind of based on, my love for not only my love for the game, but growing up as a caddy, I found that I learned a lot about the game of golf, but I learned more about people. It's a game where the rules are super important. It tells a lot about one's character. You play the ball as it lies. You count them all. But not only that, I think the metaphor can also be used for golf course management, risk management. It's helped me think about how I manage portfolios over the years, and I just think it's been fun. You're not really a golfer. That being said, I remember when I was interviewing you. Um, you had a Michael Jordan jersey behind you. What was that all about?
Yeah, as you know, I'm a huge fan of basketball. I grew up playing basketball, so that was number one. Obviously, Michael Jordan arguably is the greatest of all time. And I think the second thing, I just appreciate greatness across sports. So yeah, that was sort of the background of that jersey. And how I got that jersey, actually, my brother, followed in his footsteps. He was a big basketball fan, grew up playing basketball, a lot better than I was. And he had the opportunity for several years to actually be a coach counselor at Michael Jordan's camps. And so at the camps, they would allow you to basically have 3 items signed. And so surprisingly, he was nice enough to allow me to give him a jersey to have it signed. And so that's how I got it.
Got it. Fantastic. And ironically, we went from golf to basketball, but it goes back to golf because, as we all know, Michael Jordan is a golf fanatic.
Yeah.
I've been lucky enough to play at his golf course in Jupiter, Florida. And he's very much known for playing 36 holes a day, every day of the week, and playing fast. And he is an absolute golf nut. So basketball and golf converge. Let's get into it. We brought you in. There is, I know I've been talking about this in our investor forum that there seems to be like a pretty big narrative mismatch between, the thinking that there's just an enormous amount of private market product that's being targeted at the wealth space
Mhm.
versus what you and I know that the actual allocation
Yeah.
or adoption
Yeah.
of private markets has been slow. I'm kind of finding both statements might be true. What are your thoughts on that?
Yeah, I mean, I think from the demand side of things, which would be, individuals investing in private markets, if you look across, globally, probably 150 trillion dollars of kind of wealth assets. And depending on who you ask, the penetration of private markets anywhere from like 2 to 5%. Obviously, it depends on the segmentation. So, investors that are higher up in terms of wealth, they have a bit more exposure. Folks that are, maybe 2 to 5 million less, they're probably in the 3 to 4% bucket. So definitely underpenetrated if you think about just moving the needle of a broader portfolio. It makes sense to have 10% plus in a particular asset class because that's going to move the needle. Otherwise, perhaps it doesn't make sense. And then also in the context of if you think about institutional investors, obviously that's more longer duration, more patient capital. And so by definition, they should have a lot more exposure. But I think the gap is probably too significant right now, where you have institutional investors anywhere from like 30 to 50% in private markets. So, I think it makes sense for individuals to be anywhere between 10 upwards of like 30% for sure.
Makes sense. And listen, we have been really starting to focus on it. We're trying to get it into our models. We are starting to see really interesting offerings as folks come in with their absolute best and interesting offerings for us. I'm super excited because I think it really tells, I know particularly on the income side, we've done a nice job of getting, a few hundred over public over the last couple of years. Um, using a combination of a private credit strategy and a triple net lease. And I know, when we talk about getting at this AI super cycle, not just in our public, but also for QP folks in private. Super jazzed about that as well. You come in, and I'm excited to have you here because I think that was a missing piece. And you come with a heck of a pedigree. You went to Stanford Business School, you're a CFA, you've spent 15 years in the industry. What is kind of your vision for our platform as well as some big themes that are going through your head?
Yeah. Yeah, it's a good question. I mean, as you know, I think I was pretty thoughtful and methodical and patient, with a next opportunity, and it was kind of a high bar for me. I think where we sit, it's really, really exciting because we're at the center of this whole democratization of alts. We have 60 network partners, and everyone is sort of at a different place in their investment journey. But the bottom line is that there's going to be significant growth going forward because, as we talked about, private markets it is an important diversifier for portfolios. We've seen the stats around the number of public companies that have basically, come down in terms of opportunity set, by the tune of like 50% over the last 15 to 20 years. And so there's just a lot of value accretion that's happening in the private markets that used to happen in public markets. So from just a diversification standpoint, opportunity set standpoint, private markets make a lot of sense. So it's Dynasty from a platform perspective is interesting because, as you know, and when I joined, there were just so many managers that were inbound calls coming at me and emailing me about wanting to have a relationship with Dynasty. And so we have this nice flywheel where the scale that we have, it allows us to basically partner with the right managers. We have the inbounds, even the outreach that we do proactively going out, talking to managers. They're super receptive to that. And so we just really have an opportunity to partner with great managers, deliver that in a thoughtful way to the network. And it creates a great flywheel for everyone.
Thank you, and I agree with that. And I think one of the really important things, one, you know, you're going to help me with portfolio management and construction of our the portfolios we manage here, but also be a major resource for the network on private markets.
Yep.
I'm also excited because gatekeeping is as, if not more important than sourcing. Would you agree with that statement?
I agree. You talked about the supply of products and strategies out there, and it is true. We talked about there's a massive amount of demand and growth from just an investor standpoint, but at the same time, it is true that there is some garbage out there that we need to vet and curate properly for the network. You do have situations where you have managers that maybe didn't have institutional quality strategies, and they don't have a strong institutional capital base, and they see the wealth opportunity as a way to sort of get that capital, but it's not quality manufacturing and capability. And so the vetting is going to be incredibly, incredibly important. Um, you have so much, and I think especially, and we talked about this recently, especially given where we are in the market cycle, where the expectation is, clearly, you talk about valuations, full to maybe rich, still constructive on risk assets, but that we do expect that there's going to be a lift in volatility. There's going to be a bunch of dispersion, whether you're talking about private credit, private equity, et cetera. And by the way, private markets is, if you look at the historical data on the private equity side, for example, the dispersion between sort of top quartile manager, bottom quartile manager, that range is much larger for private markets, private equity versus traditional assets. Private equity, for example, depending on the data you look at, 20% dispersion. If you look at a large cap equity, the dispersion is more like 5%. So curating And as you talk about making sure we're vetting these managers properly is going to be critical.
Agree. I know, the way I'm thinking about the world, I think this AI super cycle is powerful. I think it's still early. I mean, ChatGPT release was just 3 years ago. Um, I think it will be fraught with a ton of volatility along the way. It's not a straight line as we digest, some excitement that comes in and overexuberance. But what I do know is I like using the best and brightest active to get at this. Why? We're seeing, like, I think I'm a good top-down allocation person. I think picking winners and losers in this space is takes a lot more time than I can put to it. I know in the public, the way we're allocating to public and doing the same thing in private. You'd rather have the best and brightest navigate the growth equity cycle over a 10-year time frame. And the same goes as we're seeing, headlines where there's immediate disruption that's being priced in.
Right.
We're seeing what's happened in software. That's affecting private credit. That's affecting private equity. It's affecting the stock prices of a lot of the private asset managers. What are your thoughts on kind of, some of the wild volatility and around this and how that how that makes you think about making allocation decisions?
Yeah, I mean, I think top level, what we talk about is the importance of diversification and how that is, when we think about private markets and having that expanded toolkit, it is important to think about diversification in a different way, right? We talk about diversification not being dead, hasn't gone away. There's been obviously a lot of correlation between equities and what used to be a good balance for portfolios and fixed income. Correlations have lifted there. But also again, the opportunity set in private markets has expanded a lot. And so diversification now, it's critical, I think, to have private markets exposure. So that's first and foremost. And then again, just thinking about, vetting and you talk about volatility, it is incredibly important to make sure you're partnering with the right managers, you're invested in the right strategies. And what we lean into, I think, in the context of thinking about how to vet these managers, it's about people, what are their experience, looking at track record, looking at turnover, their process, making sure it's durable, it's repeatable. Obviously, as you talk about, with fees, which, is something that is interesting to us and where we have a lot of leverage negotiating down fees or price. And then the fourth piece of it is performance. And so, as you know, the managers that we've been leaning into are the managers that, are really thoughtful and responsible around things like leverage levels. If you think about like private credit, making sure that they are leaning into top of the capital structure, not taking a lot of credit risk. They're underwriting credit properly, underwriting the assets properly. So those are all the things that we're really focused on. And again, there's going to be a lot of dispersions, winners and losers, as you say. And it's just going to be critical to make sure you're being really thoughtful around allocations.
Well, I'm glad to have you on that wall now, so to speak. One of the things I'm most excited about over the last three and change years that I've been here is we continue to get to the source of allocations, the best allocations, whether it's single stocks, taking fees on top of fees, really getting to the source. We're getting anchor allocations from tier one managers. We're getting founder shares
Yeah.
that no fee, no carry. We're starting to get some really interesting things. So, super excited about that. We touched on at the beginning. Let's have some fun now and get a little personal, and then we'll wrap up. But we talked about basketball, but I also know from our conversations that you're a high rocks athlete.
Yeah.
Would imagine that takes some discipline and dedication away from the many hours. I see you here pounding over spreadsheets. Tell me a little bit about high rocks and also rumor has it that you're a mean salsa dancer. How how have those shaped the way you are as an individual or think about the world?
Yeah, I mean, I think High Rocks is aligned with my upbringing. As I view myself as an athlete, I've always considered myself an athlete. I mean, we started off talking about golf and basketball, and sports in general. I mean, it's just taught me a lot. I think the things that I've learned about from sports would be, grit. That's really important to me. Just, being someone that, regardless of, maybe stumbles or, any sort of falls along the way, the ability to sort of get back up or grit around, if there's a wall in front of you, just having the confidence that I'm going to figure out how to get through that wall. I'm either going to bust through it, find a door, jump over it, go around it. That's super important. The other thing about, basketball, sports, high rocks, et cetera, the importance of, in basketball, they have a term that they say, I think Kevin Durant says it a lot, shooting with confidence. That's really important in sports, in life. Golf, same thing. I think this next one, just around focus. Focus is incredibly important. Being able to, say no to a lot of things so you can really focus in on your priorities and do those things the right way in a thoughtful way. And then High Rocks is just, what I'm doing now is it's just a great outlet. I love just being and keeping myself in shape, allows me to be healthy, but it continues to be something that I do also because it creates discomfort and I pursue discomfort. It just keeps me out of my comfort zone. And I know that's when I'm stretching and growing the most is when I'm feeling uncomfortable.
Uncomfortable, like answering my question about salsa dancing?
I was going to address that one, but yeah, the salsa dancing I got into probably 15 years ago. I did a Spanish immersion program in Mexico and somehow linked up with a group of like professional salsa dancers in Mexico. And
Sound,
so like
sound,
that's how I started.
sounds like fun and
Yeah.
another good way to blow off steam.
Yeah.
Karim Simplis, happy to have you.
Yeah, appreciate it.
Thanks
Thanks
so
so much,
much.
Bob. Thank you.